Hi everyone, welcome to today's video. So here is a list of stocks that I have decided to sell. Some of these stocks I have sold completely. Some of these stocks I have sold partially. Some of these stocks I am going to rebuy. So on this video, I am going to explain it to you in very simple language. As to why did I decide to sell these stocks? What was the advantage for me? Second key point, that I would be getting some money after selling this stock. So I would be getting around 40-50 lakhs. So what is it that I plan to do with that money? Am I going to leave the stock market, invest this money elsewhere? Very important note that people usually tell you whenever they are buying stocks, but hardly anyone ever discloses when they are selling stocks. More importantly, I have sold these stocks at a loss. So if you like the very transparent content, very humble request that please consider liking these type of videos. It will reach out to more people. So without further ado, let me kickstart the video. So first and foremost point, and I want to say this out loudly, that I am not bearish about the market. I am bullish about the market from a mid-term and also in the long-term perspective. Short-term, no one can predict, right? So now why is that? Let me show you some data around it, and very quickly, I will explain you some technical points here. So you will see that this is the Nifty 50 chart, and I am looking at a monthly candle. For people who are new, what is the meaning of Nifty 50? This is the collection of top 50 companies in India, and we are looking at that collection's monthly performance month after month. So what you would notice is that consecutively for the last 4 months, the markets have been going down, and something very interesting is happening in this last candle, and I'm not sure if you can actually see this. So this pattern, this last pattern where there is a very small body, you can't even see it, and a very long wick. This pattern is called as doji pattern, and I will link some of my videos on technical analysis in the description and comment box where I have explained a lot of patterns. So in case you are interested, you can learn from there. It's completely free. But let me quickly explain you the significance of this pattern. So whenever you see this type of a doji pattern, it shows indecisiveness in the market. So what is the meaning of indecisiveness? It means that, you know what, the market does not know whether it should be going up or it should be going down. So kuch bhi ho sakta hai. So that is the meaning of indecision. But you have to relate this to the next point that I'm telling you, that again, go back and revisit this chart, and what you will notice is that, okay, similar levels. So you're seeing this level of 17,200. Again, this level existed back in September of 21. Which means that almost 1.5 years have happened and the Indian markets have given 0% return. So to me, as a logical investor, it makes 0 sense to be a net seller in the market. So to cut the long story short, I am bullish about the market, both from a mid-term to long-term perspective. And also add to this, and here is Nasdaq Composite, jo US ka index hai. So that has gone up and given quite aggressive returns over the last 1 month. So it has gone up by 6.5-7%. So which is fairly healthy return, and it shows that the markets are breaking out in the US. Why it is not happening in India? So again, you are smart enough. There is a big company that is creating like a lot of hoopla. So it's because of primarily that. Now I know a lot of you would be thinking, yeah, Akshat, you are saying you are bullish about the market, and on other hand, you have sold your stocks worth like 40-50 lakhs. So what is going on, and are you a dogla person? So let me explain it to you again in simple bullet point format. So I sold these stocks on 31st of March 2023. Now you'll say, acha kuch auspicious day tha, ya muhurat nikalwa ke aaye the? Nahin, nothing like this. This is basically the last day of the financial year to do tax loss harvesting. So what is the meaning of tax loss harvesting? So let me explain that by using a simple example. So all of you know, who have been following me, that I am mostly an investor. So I buy stocks, hold it for years and years together. And also I take some swing trades from time to time. This is an information that I have disclosed quite aggressively on my YouTube channel. So basically what tax loss harvesting allows you to do it, that in India we have something called as short-term capital gains tax. Now what is the meaning of this? So let's say that I have invested a lot of money in the stock market in the last 1 year, and I have a total loss of, let's say, 10 lakh rupees. So this is notional loss because I have not decided to sell my stocks yet. And also I traded as per the market circumstances. And let's say that I made a real profit of 10 lakh rupees. So basically this is the profit that I've already booked. Now, as per short-term capital gains tax rule, because I have booked these profits, these are not notional profits, these are real profits, I would have to pay 15% short-term capital gains tax. Now, in order to avoid that, what I can do is, so I can offset this profit against these losses. So I will not have to pay this 15% short-term capital gains tax. So I hope this simple concept is clear, and this concept is called as tax loss harvesting. Now comes a natural response ki acha, should we always do tax loss harvesting? The answer is no. It's not as if that you absolutely need to do it. If you are very happy with your stock picks for that particular year, even if they are at a loss, you can continue to hold them, no problem there. But this definitely gives you an opportunity, especially if you are in profit, to kind of offset and refine your list as per the developing market circumstances. So this is a flexibility that I explored. And again, if you want to understand more, I will link some articles that will help you understand more about tax loss harvesting. You can go and check it out. So very quickly summarizing that this mechanism of tax loss harvesting allows me to rebalance my portfolio as per the developing market circumstances. That's one. Second key thing, that what am I going to do with that 40-50 lakhs that I have got? So I would be reinvesting that money into the market when very soon, and I will make all that information available on YouTube member community. There are links in the description and comment box in case you want to join. And also I know that there will be a few people who would comment, Akshat, why did you not tell this on 31st March 2023? Because guys, I cannot quickly make videos and release it. So that information, whatever critical communication needs to be given out, it is given out in a text format to members community section. Because if I start posting all this on public forums that, you know what, I've sold stock like 40-50 lakhs, this, that, without putting like proper explanation, people will just panic. So anyways, coming back to the topic, that I am not bearish about the market at all. Whatever money I have got by selling all these stocks, it was a simple mechanism of tax loss harvesting. I will be reinvesting that money into the market. And final point is that there are stocks that I will not be rebuying, right? So this is the list. Again, please take a look. Some of these stocks I am not going to rebuy at all. Some of the stocks I might consider buying subsequently. So let me very quickly help you understand the rationale as to why have I decided to partially or fully sell these stocks. So the first stock that we are going to speak about is Amara Raja Batteries. This is a stock that I have completely exited and I have no intent of rebuying it, at least for a substantial future. So what is the reason behind it? So let me very quickly take you through some important bullet points. So one of the key reasons why I had decided to invest in Amara Raja Battery was that it is one of India's foremost battery makers, right? And I was very bullish about the EV play, that, you know what, a lot of cars are now moving to electric, a lot of e-rickshaws, two-wheelers are moving to electric. But unfortunately, what has happened in this entire EV play is that the adoption and innovation in battery is still very much underplay. So let me show you some important data first, and then I will elaborate more on this point. So if you take a look at this particular chart, what you will see is that where is it that Amara Raja is focusing on? So 92% of money comes from storage batteries. And what type of storage batteries does Amara Raja makes? So they are predominantly into four-wheelers and inverters, and almost 50% of their business comes from there. Now, if you ask a critical question that where is it Amara Raja Battery is currently focused on? So the answer comes out to be lead acid batteries. So one natural question after looking at all the data that should come in your mind is very simple. Ki, acha, lead acid batteries. But if we are looking at the adoption of the EV space, then how good are lead acid batteries? So to cut the long story short, there are four major EV batteries. One is called as lithium ion, one is called as nickel metal, third is called as lead acid, and then there are ultra capacitors. Now out of this, what has started to happen is that lithium ion batteries have started to gain a lot of prominence, and they are much better compared to lead acid batteries. Now what is the reason why lithium ion are better than lead acid? So I can make an entire video on that, but here is a very quick snippet that shows the limitation of lead acid batteries. So I do not feel that Amara Raja Batteries going forward is going to be highly competitive when it comes to EV based battery manufacturing. They will have to reinvent the wheel and try to gain expertise in it. So this looks like a very shaky space. So I'm completely out of this stock. I have booked a loss on this stock and I am not looking to re-enter that stock as per current information. Now on top of this, if you take a look at the company's profit growth rate for the last 5 years, it's very dismal. It is not even beating inflation. So the growth rate has been fairly slow, and this primarily might be because of the fact that they are not able to evolve from that lead acid battery game. Okay, so the second stock that I'm going to discuss very quickly is Gillette India. They make like shaving cream, shaving brush, razors, this, that. So they are primarily into grooming's product, and it's a multi-billion-dollar company. Very strong company, international company, lot of product innovation, lot of good things. So then why did I decide to sell this particular stock? Let me quickly give you my perspective and whether or not I'll be re-entering this. So the short answer is no, I will not be re-entering Gillette India as of now. So the first key trouble that the company is facing is that it is in a category where they are unable to raise the prices of the product. Now you'll say कि यार बढ़ तो गए, सब चीजों की महंगाई बढ़ रही है. Yes, I agree, but not at the level that HUL and other companies have been able to raise prices of their product product. Now think about it this way, that Hindustan Unilever products have very strong brand value. Gillette also has a very strong brand value. But Hindustan Unilever is able to increase its product prices. But Gillette India is unable to do this. Now why is that happening? So there are two critical reasons that I can think about it. So first and foremost, take a look at this chart, and what you will see is that almost 80% of Gillette's business comes from grooming segment. Now grooming means kya? Daadi banane wala, daadi ka oil, this, that. Now what has started to happen in this space, there are two things that have started to happen. So the first key thing is that there is competition segmentation that is happening. Now what is the meaning of competition segmentation? For example, female shaving range, then you have men's shaving range, then you have like some daadi banane wala oil. All these different categories are getting segmented into different companies. There are highly niche companies that have come out. Now what they have started to do is कि अच्छा आपको विराट कोहली जैसी दाढ़ी चाहिए तो ये रहा दाढ़ी का oil. So they have created an entire company on that. So what has started to happen is that there is massive competition segmentation that is happening. So in this type of a business, there is no economies of scale that is benefiting a company like Gillette, as per my understanding. This is the first critical point, and you need to see this in conjunction with the second point, which is called as D2C sales. So D2C sales means कि जैसे for example you would have seen these days कि mattress बनाने वाली कंपनियां have started selling directly to you through YouTube ads. अब YouTube एड देखोगे कि यार मेरे को नींद नहीं आती, मेडिटेशन कैसे कर लूं, एंड देन यू विल बी शोन एन एड कि ये रहा गद्दा, सो जाओ, मेमोरी फोम एंड व्हाट नॉट. सो बेसिकली व्हाट हैज स्टार्टेड टू हैपन ओवर द लास्ट 4-5 years is that D2C sales is getting easier and distribution in D2C has become easier. अब जैसे गद्दा बनाने वाली कंपनी और द मैट्रेस कंपनी that I'm speaking about, they can directly manufacture it at a small scale and ship the product to you. So this direct to consumer selling is definitely hurting a company like Gillette India as of now. So I do not see how they will be able to maintain their moat. One of the prime reasons for this has been that Gillette's India products are already very crazily highly priced. For example, I can talk about Mark III. Now go and check how expensive the blades are. अब भाई 250, 300, 350 रुपए का एक blade. What are you going to do with it? It's not as if that, you know what, people will be able to say, अच्छा, you shaved from like Mark III. No one cares about that because they can't see, and neither can you prove that you have actually done shaving from like using Mark III or whatever, right? So this is the problem with Gillette products right now, that they are already very highly priced. Competition is increasing and there is no way that you can show the brand, right? So they cannot even increase the prices like crazy. So for me, this type of a large company is likely to suffer in the future. So I am not re-entering it. I had purchased Gillette India because I was getting it at a decent price. Unfortunately, the price kept on falling. So I hope this point is clear. So the third stock that we are going to speak about is AstraZeneca. So basically it's a pharma company and it manufactures a ton of pharmaceutical medicines, and these are some of its bestseller medicines in India. So this is the primary business model of AstraZeneca. Now what is the problem with AstraZeneca's business right now? So one of the key problems that they are facing right now is that they have not been able to launch blockbuster drugs on sustainable basis. Kabhi aati hai, kabhi nahi aati hai, and it takes a lot of cycle time for them to go and launch blockbuster drugs. Blockbuster drugs means that, you know, very high value drug that is raking in a lot of money for them. And this reflects in their sales, that if you consider even from like 2017, they have not even doubled their sales despite the entire COVID growth, vagera. So hardly any massive uptick in the business. Now, if you consider sales growth, again, this is reflected that if you consider last 10-year CAGR, 4% growth rate for the firm, which is not like very healthy. If you consider its capacity expansion, again, the picture is not like very healthy. That if you take a look at their fixed asset capacity expansion, so it's not as if that they are showing a lot of faith in terms of their expansion capabilities. They are not pouring in more money. They used to put in more money back in like 2015, 16, 17, all these years compared to what they are putting now. So again, it's not a very healthy sign. It doesn't look like that the company is focusing too much on growth, or at least they don't know where the growth is going to come from. So they are just waiting and watching. So these type of stocks can take a substantially long amount of time to recover. Now, of course, right, I can be wrong. I'm simply presenting my analysis. So these three stocks I'm completely exiting. So one stock that I have sold partially and I will probably re-enter it and buy more of it subsequently is Hathway Cables. So let me very quickly explain you the pros and cons of Hathway Cables and what are the risk and reward equation I see with them. So if you consider the business outlook of Hathway Cables, so it's not as if ki jhande gaad diye, right? It's not as if that sales has gone up massively over the last several years. But having said this, there has been turnaround in their fortunes because they are now making profits without increasing their sales too much. So if you go on the promoter tab, what you will notice is that, you know what, that Jio, it went and bought Hathway Cables in the year 2020. and over time it has reduced it because as per SEBI mandate, that promoter has to bring down their shareholding to 75%. So Reliance had to sell that. Now, because Reliance had to sell it, the stock did not move quite aggressively. That's point one. And there was massive beating of small cap, mid cap companies. So since 2017, 2018, the small caps and mid caps have been badly beaten. And Hathway Cable also became a collateral damage, so to say. So this is my perspective. It's not as if that Hathway Cable has some massive problem going with it. It has been acquired in a way by the Reliance group. Now Reliance will fit Hathway Cable into its Jio plan and then look at the overall expansion. So then why did I decide to sell or lighten my position on Hathway Cable? The reason is very simple, that I am not completely sure how Reliance is going to operate from this point. One of the key good things that happened with Reliance's stock was around 2020-2021 period when they were able to raise a lot of capital that led to the burgeoning of their stock. So all good tech companies invested in Jio. So there is a long-term game plan that Reliance has, which is good news, and the Reliance stock gave a run up. But now we need to be clear that whatever next layer of growth is going to happen from Reliance, we need to be sure where it's going to come from. You can see from the shareholding pattern that it is mostly controlled by the Reliance family. And the problem with family owned stocks is that they will move whenever the family wants the stock price to move. Right? It does not depend on the fundamental stock performance. That is the primary issue that I have with Reliance. Now, again, please go and take a look. Between the time period 2009 all the way till 2016-17, Reliance gave 0% return. Now, some of you might be confused, yaar, main Hathway Cable bol raha hu, Reliance bol raha hu, what is happening? No, see, again, it's the same Adani story, that when the family owns a conglomerate and there are a set of individual businesses around it, the money can move around these different businesses. Now, I can explain you how exactly that happens. That is highly complex corporate finance, but I think you guys will get bored. But I hope that you get the message that Hathway Cable will move in isolation compared to the Reliance group of industries and Jio. But it is very unlikely that Hathway Cable will individually move and other Reliance group companies will not. So at this stage, I am not clearly seeing where the growth for Reliance will come from. So therefore, I have lightened my position on Hathway Cables also. So the final stock that I will speak about is Lal Path Labs. Now, Lal Path Labs has fallen quite aggressively. The reason why I decided to purchase Lal Path Lab was that it had fallen quite aggressively. So I was getting it at a decent price. But after I purchased it, the market kept on going down and down and down. And my loss kind of increased. So let me very quickly help you understand the fundamentals. So if you consider the sales figure, it is doing fairly well. If you consider the profit numbers, again, there is no major problem with Lal Path Lab stocks. So then a natural question comes कि अच्छा इसी के problem हो गई Lal Path Lab में, that it has fallen so much. It was trading at 4,000. Now it is trading at 1,800. So more than 55-60% correction has happened. So what exactly was the problem? Well, according to me, valuation was a problem. That during COVID times, Lal Path Lab shown a lot of growth. People were over betting on that stock. And now the stock has come down to sensible levels in my opinion. So this is a stock that I will 100% re-enter. So then you might have a natural question कि अच्छा इस stock में growth कब आएगी? So I feel that there are two ways in which this company will grow. So one is that it will expand its total diagnostic centers and collection centers. So I don't think that they are undertaking that expansion drive as of now because the real estate expansion has happened quite aggressively over the last few months. Number two, the inflation has become very high and interest rates are also very high. So they can't go and physically create too many centers without incurring too much expenses. So they are probably looking at their expansion strategy and are deciding on the right time कि भाई expand कब करना है. But the fundamentals of the business is good. The brand value of Dr. Lal Path Lab is good. The industry is such where the prices are going to increase in terms of diagnostic testing, वगैरह वगैरह. For example, very recently you might have read the news that from 1st April 2023, the price of even essential medicine is going to go up by 12-15%. अब आप मेरे को बता दो कि 12-15% से if दवाइयाँ are going up, critical medicines are going up, then everything associated with healthcare is going to become more expensive. So by 12-15%, Dr. Lal Path Lab will anyways grow just by increasing their prices. So out of all these stocks that I have discussed today, the most trust I have is on Dr. Lal Path Lab. It is available at a decent price and I am looking for a good opportunity to re-enter it, and I'll make the announcements whenever I'm rebuying this stock on the member community tab. Thank you so much for watching this video and I will see you soon.